The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host.
The following takes place between 2 p.m. and 3 p.m.
every day. Anyway, we've got a market that's off a little bit. We've got a handful of people, and they have the initials FED that just can't quit talking. And, of course, Janet Yellen was out there talking too much earlier this morning. We seen the results of that already in the indexes. And, of course, at 2:30, we have yet another Fed dude that will be out. So look for his the text of his speech out probably about 2:15, which is what, about another 7 minutes or so. So maybe we'll see some more movement or clarification or something about what they're actually going to do. But for the moment, just a lot of jawboning in the market. And we start the day off at 2101 on the S&P cash, 2.5 billion shares. So volume continues to be good up or down, at least compared to a lot, maybe just 4 or 5 months ago. If we would have had 2.1 billion shares, it would have been a kind of an okay day. 2.5 billion shares, a little bit off of yesterday's volume and the days where we were up higher, but not that much. This is not, us coming into 2 o'clock with 1.9 billion or 2 billion shares. This is some decent volume. And, of course, we got a little earnings after the bell with Facebook, and my guess is they'll do okay. There are some bigger issues and bigger fish to fry in this market, and that is the real problem that no one's going to be talking about. We've got, of course, a lot of things. Gold's been weak. The dollar's been strong. We're up 87 cents today, and 98.03. If we get any kind of indication from the next Fed president, which is who? Let me get my schedule up here. We're going to get into the slides just a little bit earlier than we had before. Thought I had it in here. Okay. Janet Yellen spoke at 10 a.m. this morning. We've got Dudley speaking at 2:30, and at 6 p.m. tonight, we've got Stanley Fischer. Of course, tomorrow, we've got Harker at 8:30 before the bell. Dudley speaks again. That won't change anything. Fischer speaks again. He's not going to change anything from one day to the next. Lockhart probably be the most likely to move the markets maybe a little bit tomorrow at 1:30. But Janet Yellen pretty much said it all today, and that is, if the market gets weaker, we're going to negative interest rates. And, of course, in the meantime, we're going to be raising rates in December, we think, maybe, sort of, kind of. But you know what? If kind of the old faith healer thing, right? You just didn't believe in God enough, so he didn't heal you. If you would have truly believed in God, he would have fixed that leg or cured that bad back. But no faith healers here for an economy. Just Janet Yellen, yada, 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 and soon Dudley Fischer, or William Dudley, yada, 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 and Stanley Fischer, yada, 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 yada. In the meantime, let's get to something that makes me feel better, and that's a little bit of history repeating.
That it's all just a little bit of history repeating.
On this day in 1929, of course, the markets are in free fall. dogs and cats living together, real wrath of God stuff, 1929 after the crash. In an attempt to calm panicking investors, the New York Stock Exchange announces that will be open for trading for only 3 hours a day. The investment public takes no comfort trading an astounding 6 million shares in just 180 minutes, twice the level of the day before and weeks before. So China's figuring out the same thing. It just doesn't change anything. We can turn the machines off, but Mortimer, he wants the machines back on. Get back in there and sell. I mean, buy. I mean, sell. I mean, something. But the markets will be the markets, and standing in the way of them generally just causes bigger problems than it solves. And we've seen that with the Chinese, and we learned that here ourselves in 1929. Of course, we've got other things going on out here. Breaking the law, 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 breaking the law. Okay. Apparently, the first high-frequency trader is going to the Huskow. Michael Koska trial was the first to use anti-spoofing law that came out of the 2010 Dodd-Frank Act, made it illegal to manipulate prices by placing orders without intending to trade on them. That law, which also provided an easier standard of proof to try cases, was put to test in the Chicago federal court amid stepped-up civil enforcement by the Commodity Futures Trading Commission. And, of course, last night he was found guilty. Very unclear how much time he's going to get, but at least from the reports, it looks like they're going to get some. The damning evidence came from the programmer, and his name was Jeremiah Park, a computer programmer, worked for Panther Energy, created trading algorithms under Koska's direction that included quote orders designed to pump up the market, according to Park's notes and testimony. The quote orders were to stimulate the market to get a reaction, Park said. And, of course, there was a lot more testimony, but he was having somewhere in the neighborhood of, I think I remember seeing 5,000 orders for actually one trade. And slowing, basically like a lot of other people, he was working to slow down the market so he could get a little bit more of a head start. But this is the first one. Since they've won, we can probably suspect there will be a great deal more people headed to the Huskow. And, of course, that's a 2010 law. It really didn't go into effect until 2011. So probably not going to get anybody that really had anything to do with the flash crash. But those that continued to do high-frequency shenanigans and other things look like they will have their day in court. And now that he's lost, I suspect we're going to see probably a handful of people starting to make deals with the man. And not a whole lot of enforcement. Of course, very interesting comments from our friend over at Nanex, Eric Hunsader, who very interesting. The company that the gentleman was Michael Koskas was doing, the company that was placing his trades and handling his stuff, basically said they fooled him too. And kind of interesting to see that a single guy with a couple of handfuls of programmers could actually pull the wool over all these very smart guys out there. But interesting Twitter posts if you read Eric Hunsader's Twitter blog. If you want a link to it, just email me at path@tfnn.com. Of course, we talked about the yada, yada, yada business. It goes on and on and on. They just won't quit for us. And, of course, more talking about breaking the law. I don't know if we can throw them in jail. If I was president, in fact, I'm going to get and make a segment. If I was president, if Dave White was president, what would he do? Well, I would certainly change the law, especially for carriers, cell carriers. Verizon scans, now at least in the Northeast, Verizon is scanning all the digital signatures of inbound and outbound email messages to reduce the overall volume of spam on our network, they said. And an email containing a hyperlink will be considered spam. So if you wanted to send something to me and it had a link in it and it's on your phone, I won't get it because the Verizon Hitler Youth have taken over. And what is this about? They just don't want to spend any more money on their network. And the easiest thing to do is cut down on anything with a link instead of actually try to figure out how to get just the ones that are spamming you off. And they don't really care. But as many people dislike the pharma business or the biotech business, I think the real Satan in America, probably not too far from Verizon's office for pulling such a sneaky and cowardly and skunky like scam as telling you that you will get unlimited data and going around and cutting the data off just so they don't have to give you unlimited data. But I don't know. Like I said, if I was president, you'd be able to take a good whack at these folks with a shovel for being pretty horrifically bad sports about what's going on out here. What else do we have out here? I think this is all stuff I talked about before, but that's it. What else we have going on here? And we're at 2103. This thing's going to bounce around here for a little bit. Of course, it's all about the Fed coming out tonight, so we'll keep an eye on that. But we got a little ton of anything else. Just checking my mail, looking around here to see what else is going on. Had an email. Now I can't find it. Where's it at? It was earlier today. The question was about Fitbit. I'm probably not going to get it all in on this, but let's take a quick look at Fitbit. This is a recent IPO. And the downside of these IPOs, get it up here, hang on a second, is that it's not uncommon for them to have what I have been talking about for years, which is a sliver deal. And on the sliver deal, what is that? That is where they actually have tons of stock, but they only put a little bit out at the beginning. And therefore, the market starts trading like there's not a lot of shares of the stock. So there's an artificial lack of liquidity. What we found out from Fitbit after the earnings 2 days ago, of course, is they're going to push a lot more of this stock out. The problem is that it seems to never stop with these new IPOs. They do nothing but suck huge amounts of cash in. And I will find the email. But the question is, how is companies like Fitbit offering secondaries? What's that going to really do to the market long term? We'll answer that question and many more as the world turns after this brief commercial interruption.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we were talking about Fitbit when we left. It continues to be kind of a problem in that a lot of these stocks need a lot of cash. Fitbit certainly looks to me like this may not be the last of these secondaries as they push a lot of this stuff out. And one of the things you probably should look at, especially when these companies have not been around for a while, is the original IPO and what they call the red herring. Most of the initial prospectuses will talk about how many of these things that they have set up on the side and how much cash that they will need to grow. And a great deal of them probably you're going to be sitting on your hands for a while before they get those shares out. And of course, the market has to be ready to accept them. And we've been in a market where I can start to say that as far as IPOs, the markets are kind of a doubting at Thomas. Right now, we're really into the stocks that have either been out for a few years and or are the biggest names, the FANG stocks, the others. IPOs, if you're burning a lot of cash, if you're not making any money, it's very tough to see any of these stocks really moving forward with any kind of strong move. You know, I just would leave this one alone if you were thinking long. I know a lot of people like these stocks. It's hard for me to think that a great deal of that market isn't already saturated. And like I said, I just think that I wouldn't be surprised to see if this didn't have, you know, maybe certainly the $30 on it would be the first time that I think you could even think that you would want to touch Fitbit out here. I just don't think that there's much out there for a trader unless you're shorting it. But even then, I have a feeling that there are not enough shares out there to really start accepting huge shorts in it. We got a lot of stocks moving out here, so why don't we go ahead and start getting right to them. TWX didn't have a good outlook on their future, and this thing is headed down. And talk about a beautiful setup here. The only thing I would have liked to seen is maybe this thing get back up into this huge day down from the August 5th blowout. There's 2 days that this thing blew out, the 5th and 6th of August. Now, I guess you kind of got into the bottom of the wick of that candle, but I was kind of looking at this somewhere around that $78, $79 level is where I would have liked to seen this thing go so you could pull the trigger on it. Of course, it was earnings anyway, so I probably wouldn't have been able to do that. But a lot of downside action on Time Warner, and I think you could probably make a fairly decent case that this is an ABC on the way down, and a huge one. It's retraced exactly 50% from that July 16th high. Let me zoom in here a little bit. The July 16th high at $91.34 came down all the way to $65.25 on the September 29th low. It's been meandering its way back higher. No volume move yesterday, 8 million shares or so. Of course, we've got 18 already to the downside. But that ABC would set you up for $52.22. So if we go back in the charts and look at what's at that $52 level, we got a couple of very, very nice gaps where this thing actually started a big part of its move. And the candle you're looking for is the February 6, 2013 candle, where where was the low of the day there? $50.70. And, 52.22. I think you're probably looking somewhere around that area. But it's hard for me to not see Time Warner really have problems like most of these other big companies as we move to the internet instead of cable and broadcast television. And we go to more things like Netflix. And these guys haven't figured out a decent way of providing high-speed internet and charging more money for it. They just charge more money for it, just like Verizon. They've just always thought of their customers not on how they can serve them, but how they can fleece them. And there's a reason why all these cable companies have come in at the top of the most hated list of companies in America. There's nothing new with these companies. And, I'm waiting for the day that we get Google Fiber. Fios has been good down here. And Fremont, who's bought the cable companies down here, they've been okay so far. I want a huge fire hose of data coming to me. I've got a decent one now. I want the Mac Daddy. I want that Google Fiber hood in my neighborhood. Be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. And we're going to look at Checkpoint Systems here, CKP. A particularly nasty earnings report. And I don't know what else you can say out here, down on pretty decent volume, 1 million shares already today. There's nothing underneath this. It's already now broken the August 2nd levels of 2012 and May 23rd of 2012 under that $7 mark. Probably the only thing that you can say good about this is that many brokers will not allow you to short stocks under $5, and may give it a temporary level where we don't see more and more people climb on this one. Back at on October 14th of 2013, this thing was $18.25, and it's done nothing but sell off pretty much since that high. You've got two really nice gaps out here, and my guess is that we're probably going to see one more out here before this thing finds any kind of bottom and stop from going lower. We've had some mild reversals in some of these 3D stocks. Of course, we talked about 3D systems the last few days. Their CEO left. You had kind of a little bit of a short covering rally today, although it gave a huge amount of that back. The new CEO was out talking and kind of pumping up the company a little. And again, why $5 is the level where no one can short anymore, $10 is the level where a lot of these companies have to throw the towel in because their charter says that they will only accept so much risk or not have stocks that are $10 or less, and or have a certain amount of volatility associated with the stocks in theirs. And what happens is that your value at risk models and other risk models all pretty much equate stocks below $10 with high volatility. And that means that you can't hold near as much in your portfolio. And of course, so $10 has kind of become the battleground where big ETFs and funds tend to either get out of your stock or buy it if they think it's going up. The downside is, of course, now everybody will be raining on it, because if they rain on it long enough, get it under that $10 level for 3 months, suddenly you have a lot of natural sellers yet again, and especially in a company that doesn't have a lot of good news breaking for it anytime soon. But nice kind of upside beat out here. The earnings were poor. I don't see how you can say anything else. But the idea is we've got a new CEO. We've got some new people. Maybe they'll do something to change the direction of this company. My guess is that we've got at least probably 3 months of consolidation, even if this is a buy at this level. So you're going to have to let this thing sit a while and simmer before it goes on. What else do we have out here? Wanted to look at that. Another stinker is Avon in the living dead stocks. This one was down 20% today. And I don't think anything other than the fact that you had higher volume at its previous low than you had at the, well, you had 8.5 million shares at the September 30th low on Avon products. You got into it with higher volume at 325 on October 27th. And we're back into that candle today with even bigger volume of 17.7 million shares. My guess is that this will break, and eventually it is going down the tubes. Just depends on how long you want to wait on some of these. Kind of like the loose tooth in a kid's head. Just takes forever to come out there. Some other stocks in earnings that I thought were interesting. Clear Harbors. Apparently it's a bit foggy. Did I do it right? CLH. Oh, yeah. Clear Harbors. Guess I need to shorten the time. Now, this one's breaking its previous low. Volume not in it so far, but you're going to need to close above $43.05. The November 5th low of 2014 at 43.05 had 2.9 million shares. And, of course, we kind of got that pretty decent volume today at 1.5, but still half of that November 5th, 2014 low. In fact, it's not like this pattern is actually bad. You had some decent volume off that November 5th low of 2014 all the way to the April 6th high of 2015. And the energy has been, except for a few days out here, pretty benign on the way back down. In fact, there's about a third less energy on the way back down to this low. And this could be one that is, after some consolidation, may find a low around that $43 level. Maybe a diamond in the rough. We'll continue looking on it. CHK. You, of course, can give me a call at 877-927-6648. You can email me at path@tfnn.com and post a message in the den if you want, to have me look at your stock. Chesapeake, not a whole lot to look in here, even though the percentage number is fairly decent on this on the way to the downside. But you've got a high volume low that's been untested, probably at that 601. Guess you can make a comment that the high volume low on August 5th at 56 million shares is really where the floor is on this. It's kind of that 650 area is kind of acted as support. And that's down a little bit of volume out here, but 685 high volume low, maybe it's just finding a floor, but may take a while for this thing to consolidate out, but maybe at least I guess we got numbers tomorrow that we'll be seeing in natural gas, and maybe we see just a speck of hope in CHK. Let's see what else we have on the upside. What do we have? Lumber liquidators. There's an old saying that if you put enough power on anything, it will fly. Lumber liquidators, of course, just a glint of hope out here. And, of course, massive amounts of short interest in this stock are enough to give it a pop out here today, up almost 15%. But not enough volume. You're basically right now back into the upside candle of the 9th of October. That had 12 million shares. And, of course, we got about just a little under 5 at the moment. So could you see a little bit more out here? I think the answer is yes. My guess is this is in a bigger trading range, somewhere between that probably $18 range and $10. And my guess is it's going to go sideways for quite a while. But, you know, every time you get an opportunity to get out of one of these dogs, if you're on the wrong side of them, or you're just in a fast trade, probably not a bad time to start pulling the trigger out on this one. Mr. Coors, not C-O-O-R, the beer company. The other Coors, K-O-R-S, is up about 7% today. And maybe the leather business is coming down a little off that 50 Shades of Gray and back to probably a little bit of reality. I'll have to tell you my safe word at the end of the show. Anyway, we've got, you know, this thing spike gave about half of it back. Like a lot of these stocks that have been hammered to the downside, you've got two things going against you. One, of course, is not really enough, a little too late, but they also tax selling. My guess is that you got a lot of people that were in the stock at much higher prices, were hoping that it was going to come back this year, maybe in something like Facebook or LinkedIn, and made some money on it. They're going to hold those stocks and or sell against them with the stocks that they can take losses on. This would be a good example of probably people going ahead and bailing on this thing fairly quickly. But don't look for these stocks that have been beaten down to have a good November. Even in good Novembers, stocks that have been sucking all year long don't seem to get a lot of love. They are much more likely to go up the first or second week of December after the tax selling for funds and ETFs and a lot of other people is over. Vitamin Shop, BSI. What do I see? Okay. Now, this had a nice little bounce, but again, look how much we're giving back of some of these bounces. This got up to $34.38, which is the top of the congestion zone that goes back to the 12th of October through the 21st of October before this came down. Had a high volume low at October 29th, 1.4 million shares. We're just up on 730,000 shares today. My guess is that if you're looking for more tax selling before the end of the year, don't look too much farther than Vitamin Shops. If you guys had a nice profit on this, take the money and run on these things if they're already been beaten down for the year. Let's see what else we have out here. We had Clean Harbors, Chesapeake, Resource Capital, Voya Financial. It's off about 3%. I don't know if that's a real big deal. Marco. Let's look at some of these other ones. I've got another list of stocks that may be more interesting to me. Let's take a quick look. Okay, Mobileye, MBLY, a favorite of the retail trader. A little bit of hope out here. Not a lot of volume, though. This popped up, continued strength following strong quarterly earnings from yesterday. But, and, they've raised their guidance, but giving a great deal of that back here today. Got to a high of $50.35, but given about 3/4 of that high back here today. Seems to be a fairly decent and regular theme in what we're looking at is that if your stocks are off the high, you're going to give a lot of it back. If they're breaking new highs, like Microsoft, they keep pressing higher. And so it is those who already have are getting more. Those who have not are getting it taken away. Activision Blizzard, of course, we talked about just how strong some of these companies are going to be over the next few weeks as games come out for Christmas. A little pop in this one today, and just a little bit more out of its earnings, but not a lot of juice here in the follow-through, even on this one. ATVI is the symbol on it. MSI is a stinker out here. Let's take a quick look at that one. Got a couple minutes left in the segment. Make sure and email me at path@tfnn.com. And, of course, you can always post a message in the den or give me a call, 877-927-6648. Motorola Solutions don't have any solutions. This thing's got a little smaller three-gap play. And my guess is that we're going to go fill all of these. That would take you back down to about the $60 level. We got into the first one here today. My guess is that this will continue and meander down into that gap that and gapped up on the 26th of August with about 3.5 million shares. This is kind of a smaller version that I like than I usually play, but wouldn't be surprised to see all three of those gaps taken care of in pretty short order now. Not a lot to actually turn this around. Of course, this is the spun-off issue with from Google and Motorola. And I don't know if there's anything you can say other than there are a lot there of that and more. That's got to be clear as mud. Oh, back to my list of stuff. Also on the stinking side of town is PAA. Not good earnings. Plains All-American Pipeline didn't do the business, as they like to say. Down on very strong volume. This thing's kind of been working lower than the high volume day that had 10.8 million shares back on the 5th of August. We are now underneath that, and I think we can probably get close to that 10 million shares before the end of the day. Plains All-American, the next low out here would be $26.71 from the September 29th low. And 7.4, I think we can do 10 million before the end of the day. I think that's all you need to know. Just doesn't seem to be any kind of real help in the energy sector anytime soon. CERN's off 7% today. CERNer. And it's guiding down for next year. All of next year. You've got the next big low on August 24th, $57.42. Volume has picked up, probably not as much as you would think. Just needed 5.8 though for the last low, and we've already got 6.5 million shares for it. So a lot of these stocks look like tax selling is ahead.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're going to go right to John in Philadelphia. How are you doing today, John?
Good afternoon to you, David. Thanks for taking the call. I wanted to ask you about silver, and specifically ticker symbol SLV. And, David, just for what it's worth, I speculate that the rally from late August into last week in October was the first of several rallies to come, and that this pullback will create a higher low at some point. I'm wondering if you can share with us your power law vector indicator work and tell me if that data would tend to support what I speculate or whether it refutes what I'm thinking.
It would not if we, this 1550 doesn't get challenged, or 1560 from October 28th does not get challenged fairly soon. It would say that volume has been pretty much for a while weak to the upside and stronger to the downside by about 20%. From, if we go back and look at January 21st back down to March 11th and compare it to that leg from March 11th back up to May 18th, the energy out of that was about 20% less. Same thing if we look at the ABC from May 18th down to August 26th up to this October 28th high. The energy's just not been there. For numbers on, you can't see it on my chart. 5.7 on the way down, 4.5 on the way up.
Right.
So if we look at the energy, and for those people that are new, don't know, basically what I did is put together and make a formula that looks at price and volume just the same way that you are charged for electric. That is, how fast does it go out? How long does it take to go up there? And how much energy are you actually pulling? And energy in this case is just the volume of the stocks. So to me, this looks much more like an ABC down than it does an ABC up. Now, the last few days, we've had, you've had one big day with volume that was kind of set out by itself. But I am speculating that the dollar goes higher. It probably goes higher into the springtime. And at that point, I would love to see some kind of final capitulation where everybody hates gold and silver. No one wants to talk about it. And I finally get an opportunity to buy it. And unfortunately, for the last year, everybody still loves gold, which generally tells me that it's not hit a bottom.
Excellent. Could I just ask you real quickly? There is a common stock, SLW, that's Silver Wheaton, which is related, though not exact, of course. Could you just pop that up there as well? Good man. Thank you.
Okay. I mean, same thing, energy on the way down, especially from that May 14th high to the May 24th low, or the July 24th low, had a huge amount of energy in it. At best, you would say that you want to consolidate that out, and a move of that kind of magnitude, almost 50%, would suggest that you've got 3 to 6 months in a lower trading range before the thing would even turn around. That's kind of a Tim Ord thing, right?
Yes, I got it.
Which is, if you come down that far, you're not going to just turn around unless something majorly has changed. The only thing I can see is the dollar going up. So,
David, thanks so much. That's
you
very
bet.
helpful.
I'm not a bull in either silver or gold at the time. I think maybe next spring we can have it, hopefully. In the meantime, so when you can, not when you have to. We will see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.